The dollar index has now fallen below key near-term support levels. So the dollar index is at 95.68 when I'm recording this audio. It has fallen below key support level. The next major support level for the dollar index is at 94.9. Some of the reasons for why the dollar index, or the dollar versus euro, because the majority of the dollar index is the dollar against the euro in the end. Some of the major reasons why the dollar might be weak might be the tweets that Lynn Alden has here on your screen. So she's talking about how foreigners now hold the smallest share of U.S. debt or U.S. Treasury since 2002, and the Federal Reserve is still monetizing a lot of that debt. And remember, the U.S. Treasury needed to borrow around $3 trillion in only a couple months. Another reason for why the dollar index may be weak is from Peter Schiff's son, Spencer Schiff, who is a chip off the old block, talking about M2 money supply is currently up 24.84% year over year. The Fed's next release, which is on Thursday afternoon, may show a growth rate in the M2 money supply of over 25%. So for whatever reason, whether that's the global economy is not functioning that well and foreigners are not earning dollars through global trade and then recycling those dollars back into U.S. treasuries, or people are just looking at the amount of currency and bailouts and stimulus checks and all the craziness that the U.S. Treasury and Congress and the Fed are doing, that foreigners are not buying treasuries for a number of different reasons. However, I would add that I don't see the dollar collapsing immediately or anytime soon. I still think that the dollar tug of war is in effect. So maybe the dollar index will go substantially lower back to, as you can see there on your screen in red up at the top, the levels that it was in 2018 through January 2019, where the dollar index was very volatile between 89 and just under 96. So I could see a scenario like that playing out in the not too distant future. That would not be a dollar collapse. That would be a weaker dollar. That would probably be something that President Trump and the US Treasury and probably even the Fed would want. We'll see if the dollar index gets below 94.9, but if it gets below 94.9, it could go substantially lower. However, I think the dollar tug of war is still in effect, and I think there could be demand for dollars outside of the U.S. increasing again in the not too distant future, as we're seeing a lot of problems with the Chinese economy. And if there's problems with the Chinese economy, that means that there's going to be problems with emerging markets too, especially if demand for a lot of commodities that these emerging markets normally ship to China is not happening nearly as much because of all the different problems in the Chinese economy.